Now, even though tons of dividend investors, including myself, own maybe hundreds if not thousands of shares of the NEOS Nasdaq 100 High Income ETF or ticker symbol QQQI, there's still a ton of investors that are quite confused about this ETF and how it generates a 15+% distribution rate, along with questions I frequently get like, what are the risks associated with the NEOS Nasdaq 100 High Income ETF? So I sort of want to make a one-size-fits-all video where we go over exactly how this ETF works, but then later on answer some questions about risks associated with this ETF, like the question, can this ETF lose value? Is it going to NAV decay? What's going to happen to the distributions in the future? And everything else in between. So it's safe to say that if you are interested in buying into this ETF, or maybe you already have some of it in your portfolio, this is going to be a perfect video to turn to, and maybe watch a few times just so you understand exactly what this ETF is and how it works. So that all being said, if you guys want to dig into this ETF a little bit deeper with me in today's video, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now getting right into it again, this video is going to be a little bit more dry, a little bit more of the framework of what this ETF is and how it works. Again, I make tons of videos talking about income generation, potential, and everything else. But this video is going to be a deep dive into the NEOS Nasdaq 100 High Income ETF. Now, the reason this ETF is so popular and the reason why I personally like this ETF a lot is because it seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation. Now, this ETF, at least since inception, has paid out high income every single month, probably around 60 cents more or less per share per month on average, somewhere around there. But it's done so in a tax-efficient manner, paying a ton of the distributions in the form of return of capital, which means you don't have to pay taxes on that income until you sell off your shares and or if your cost basis goes to zero. Now, along with it, this ETF also has the potential for equity appreciation, but to be honest, I don't think any of us really care about this ETF growing all that much. As long as it's going to pay us, let's say 15% per year tax efficiently, I don't think any of us are complaining. Now, just to go over the basics, high monthly income generation, we already know that. Tax efficiency, once again, is very important, especially with a high income generating ETF like this one. Upside potential, capturing some upside in the Nasdaq 100, the underlying, if of course the index rises. And of course, this ETF is managed by professional option managers. Now going a little bit deeper into the NEOS Nasdaq 100 High Income ETF, as it says right here, this ETF invests in the constituents of the Nasdaq 100 index. Now looking at the Nasdaq 100 composite, looking at the Nasdaq 100 index, this is one of the main reasons I personally do want to have more and more exposure into names like QQQI. This index since inception has been one of the best performing asset classes we've seen across the board. I mean, in the last 5 years, the Nasdaq composite's up around 100%. Now, because the Nasdaq is going to be decently volatile, that's exactly how ETFs like QQQI are going to be able to generate so much income generation through the trading of options. Now, something else that's sort of interesting to point out, if we compare the total return of QQQI to the QQQ ETF, which buys into the Nasdaq, you can see that since inception of QQQI, both of these assets have basically traded very, very similar to each other, one offering much more growth return or price return, and one of them offering a lot more income generation. But either way, both of the total returns have been almost locked onto each other, which is very impressive. Now remember guys, I said I wanted to make a video breaking everything down. This is going to be a quick and concise video to tell you everything more or less about QQQI, how it works, and how it's doing what it's been doing. Now it says right here in this article, how is QQQI doing this when other covered call ETFs are not able to generate yield and total return combination as attractive as QQQI is able to? This of course brings the question, how is the management of QQQI able to achieve this feat? A covered call strategy means owning an underlying stock, or in this case a Nasdaq, or a basket of underlying stocks, and then selling calls on those. In QQQI's case, the basket of underlying stocks consists of Nasdaq 100 members, which QQQI owns. The company then sells call options that gives the buyer the option, contract the right, but not the obligation to purchase these stocks at a predetermined price during a predetermined specified time. Now more on this, it says there are always different call options one can sell, one's closer to the current market value of the underlying stock, or the Nasdaq in this case, or ones that have a higher strike price. Selling call options with a strike price closer to the underlying stock price results in a higher option premium, which means also a higher risk of shares getting called away, or the buyer basically choosing to buy them at the determined price. Now, QQQI offers a high dividend yield, which suggests that the management is selling call options with a strike price that is close to the value of the underlying. But one advantage of QQQI is that the management is relatively free to decide how many options they want to sell and at what price and what time frame. If management is good at finding the sweet spots for option sales, it can generate a lot of income without there being overly large risks of shares getting called away. Shares getting called away is a key factor on why many covered call ETFs have such weak price performance. Now, this is because they are forced to sell early and then have to buy into shares again at a higher price, which means they do not really participate in the upside moves, but still experience price declines when the market pulls back. Apart from the active management that has, at least so far, allowed QQQI to forego this problem to some extent, the ETF has another solution. It uses some of the proceeds from the option sales to buy out of the money call options, one that have a high strike price and low option premium, which allows the fund to participate in upside movements also. These out of the money call options can see their value rise quickly during days where the market really rallies. Now, the NEOS management has been very on point since inception when it comes to trading options with the NEOS Nasdaq 100 High Income ETF and has been able to offer us investors a ton of consistent income while also not completely getting rid of some upside. But with this ETF, what are the risks and the takeaways? A lot of people always ask me, what are the risks associated with these higher income ETFs? And every single one is going to have different risks. I mean, maybe some of the risks are going to overlap because the strategies can be similar. But with this ETF in particular, it says covered call ETFs have somewhat limited upside potential. Although in QQQI's case, due to its active strategy and purchases of out-of-the-money call options, this really isn't too much of a problem. Now, whenever buying into a covered call style ETF, for the most part, you're not really going to see massive price performance just because of the covered call mechanics, but because QQQI is actively managed and also they buy out the money call options, their upside can actually be pretty decent. Now, it says their downside, however, is generally the same with the underlying index they use. In this case, it's the Nasdaq 100. And if this were to fall substantially, QQQI would do the same. And to be fair, we did see this back in April. We saw both the Nasdaq and QQQI drop pretty significantly in a relatively short time frame. But again, it's not like QQQI did anything other than what the Nasdaq did. It basically traded down right along with it and then basically recovered almost at the same exact time. So I'm not making this video to say that this ETF is bulletproof, that it's absolutely the safest, best ETF across the market and that nothing can hurt it. Of course, the underlying, in this case, the Nasdaq 100, is decently volatile. And like we saw back in April, it can lose value in a relatively short amount of time. But for the most part, if you do believe that the Nasdaq 100 is going to go up over time, you can not only harness some high income generation through an ETF like this one, but along with that, like we saw, this ETF has offered more or less the same total return as the underlying since inception. So now that we talked about the NEOS Nasdaq 100 High Income ETF, I cleared up some common questions I get kind of consistently regarding things like how this ETF works, how it actually generates so much income, how it's quote unquote tax efficient, and of course some of the risks associated with buying into the NEOS Nasdaq 100 High Income ETF. I lastly, most importantly, want to hear from you guys down below. When it comes to high income generation and when it comes to the Nasdaq 100, what's your number one favorite high income ETF across the market as of right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.